monetary inflation that depresses the value, the purchasing power of the dollar.
Marc, as long as I've known you, you've been a world traveler. You travel quite a bit each month. If you were looking at your travels, what is the most important insight that you've learned from traveling around the globe that you've been able to apply in managing your own money?
Well, the first insight I can give you is that first-class tickets have essentially doubled in price over the last 6-7 years. And that hotel prices have also gone up very substantially, and that traveling has become very expensive. Now, if you tell me, yeah, but there are budget airlines where you can, get cheap seats and so forth. Yes, if you have time, you can do that. But as a businessman, and say, I have to be at a certain time in a certain place. I can't take the risk that I'm late. And so I have to travel essentially on normal airlines, and that has become much more expensive. And the insight I have essentially from traveling around the world is a huge place, and we just have to realize that someone living in the south of the world, say on the South Pole, he sees the world from a different perspective than someone who lives on the North Pole. And so people who live in the Middle East, they have a different perspective of the world than Americans, and Chinese have a different perspective than Americans and Europeans and so forth. And I think it is very important for world peace for people to really understand that different people have different perspectives and different opinions. And I see it, and I notice this sadly, that I don't know whether it's because of the social media or because of the internet, you have today far more polarized views than before. You have blogs. These blogs are for the gold bugs. So all the gold bugs are together in these blogs. Then you have the blogs for the super stock market bears, and all the bears are there. And then you have newsletters that are oriented towards mining stocks, and all the mining stock owners are there. And there is actually very little cross-interaction in the sense that if I were convinced of my view that gold is a desirable investment, I would wish to hear the views of people who are anti-gold. In other words, you want to have interaction with people that have precisely a different opinion from you, and not with people that have the same opinion as you have. This is very important. That is an insight that I've kind of learned from traveling and seeing the world. You know, people in Brazil, they look at the world from a different perspective than an American.
You know, speaking of insights, one of the features of your monthly newsletter, you often print articles written by other money managers and peers in your industry. Is there any interesting insight that you have gained from reading or talking to some of your investment peers? As you just mentioned, you like to read, if you're in a sector that you think is favorable, you like to read people that don't think it's favorable to give you a contra view of your own. But are there any insights in particular that you have gained from the work of others that you would like to share?
Well, I mean, I've learned what I know. Obviously, I learned from someone. I didn't invent it. So I worked at Whitewell with Gary Schilling, and he's a friend of mine. I see him occasionally at the conference and so forth. And I disagree with him about that we have deflation. Because he lives in New Jersey. I just went to New York Airport the other day, then I drove to New York City, and then the Lincoln Tunnel fee I just increased from $8 to $14. Well, I'm sorry, it's a 50% increase. And so there is no deflation in the system today. But if you say there is deflation in the housing market, yeah, there has been deflation in the housing market. And if you ask me, will there be one day a deflationary collapse? Yes, I agree. One day there will be a deflationary collapse. But you understand, as an investor, it's nice to see that say there will be a deflationary collapse. But it could happen from Dow Jones 100,000, or from gold price 20,000, or from home prices that are much higher than today, and from a dollar that has depreciated much more than is the case today. So the difficulty for the investor is actually to navigate between today and the final collapse that I think is inevitable. But how do you protect your wealth in the meantime and in the final collapse? Investors, and I think they have to begin to think about this already today and say, okay, what does it mean if there is a global kind of deflationary collapse? In a deflationary collapse, everything essentially goes down in value. But obviously, like in an inflationary boom, you have different assets that go up at different times with different intensity. So let's say if you look at 2000 today, you were better off in gold and commodities than in equities. Now, in a deflationary collapse, the key is to say, okay, I'm only going to lose 50% when everybody else will lose 90%. So relatively speaking, I will be much better off. And that is the strategy that investors should consider, how to position themselves to lose less in a deflationary collapse in the final crisis than the majority of people. Then relatively to other people, their position will improve.
Well, Marc, it's always interesting speaking with you because I know the advice you have just given on this program is advice that you follow in your newsletter, because in addition to your own thoughts, you feature every month somebody else in the industry that may give an opposing view or an interesting view on the markets, which is why I so much enjoy reading your monthly newsletter. Marc, as we close, why don't you give out your website and tell people about your newsletter? It's, in my opinion, one of the best that I read.
Well, it's very kind of you to say so. Basically, I have two newsletters. One is a printed report, the Gloom, Boom, and Doom report, and one is a website report that is sent out by email every month, and both, essentially, the information is on the website gloomboomdoom.com, gloomboomdoom.com.
All right, Marc. Well, listen, I want to thank you for taking time out of your busy schedule. I know it's pretty late where you're at, but always appreciate speaking with you.
It's my pleasure.
Once again, if you'd like to follow Marc's work, you can go to his website, gloomboomdoom.com. Marc, I wish you well and hope to talk to you again.
Yes, I wish you and your listeners the same. Thank you very much.
You can subscribe to Financial Sense NewsHour in the iTunes and BlackBerry podcast libraries or at feeds.feedburner.com/FSN. Find more information about our guests at www.financialsense.com/newshour. Friend us at www.facebook.com/financialsenseonline. For our on-the-go listeners, you can access Financial Sense on your mobile device at m.financialsense.com. The Financial Sense NewsHour is for informational and educational purposes only and should not be considered as a solicitation or offer to purchase or sell any securities. The investments, investment strategies, and investment philosophies discussed or presented on the NewsHour each involve their own unique risk factors, which are not discussed on the show. Responses to listener inquiries are based on the personal opinions of James Poplava and do not take into account listeners' suitability, objectives, or risk tolerance. Financial Sense NewsHour and its parent company shall not be liable for any financial losses that result from investing in any companies profiled on or advertising with Financial Sense, or arising out of the use of any material on the NewsHour. Be advised that you invest at your own risk.